Okay, what up, traders? Just coming in with a quick recap. So I was looking at three stocks pre-market, at least that were had volume pre-market. Then I had my eyes on a couple other recent runners that didn't move much, but this was the main three that I was watching. One was M&I, and my game plan was that it says stock is gapping up to about 150 from 1% area. I am wary of these type of gaps, and we'll have to have and see approach with the stock. If it spikes at the open, I will be interested, but we'll have to wait to evaluate from there. So basically, you look at this daily, and it's closed at 44 cents yesterday, and it's gapping up to this region, this 150 area. That's a really big gap. And look at all this thing. And so, like, had it gapped up to like 3, man, you could have just bet the house because it's gonna run. All of these people are trapped. And I thought it would spike because it's gapping from here to 150. So everybody in this candle is trapped that tried to short here. So I thought it would spike, but I don't like when they gap big. I gotta wait and see approach because every once in a while those things will fade and it'll fade down to like the last hourly support. Here's the hourly. Just the same thing, It didn't give us much. Here's what it looked like pre-market. I did like the pre-market chart. I thought it was pretty clean. And so what I said is I'll kind of wait and see. But clearly, like the 140 area could be bought. And if it cracks 140, then of course the 120 area could be bought. So it gave a couple different entry prices, but what happened is we'll go to the next slide. This is me back trading it to 9. Remember, I'm always out of the market by 9 o'clock West Coast time, which is noon East Coast. So it came here, it opened, and it broke out, but it got halted. That's why you see this red screen. It got halted, and because of that, I just didn't. At that point, as it says, stock spiked at the open, then got halted. 1 second. So yeah, it got halted, and so because of that, as I said here, stock spiked at the open, got halted at that point. I was not interested, although it did set up a dip buy opportunity later. I would not have participated. So it did set up an opportunity, but once they get halted, I have no idea where it's gonna go. I've seen these things get halt and then run $8 more. I've seen these things halt and then crash. I've seen both. So my tendency is just to not mess with a halted stock because who knows where the heck it's going to go. So that was that particular play. The next one that I was looking at was CETX, and this one faded yesterday. This is one that actually it gapped up yesterday, and you see this big fade candle. It just, look at it. Every time it gaps up, it doesn't hold its gains, and so I wasn't very happy with this one. But I knew that if you're gonna play this one, you got to play it early. So my game plan was stock gapped up yesterday, spiked early and faded. It's gapping back up today, currently at the $3 range. It has support on the pre-market and daily chart at 275 area. Would like it to pull back there. However, it gapped up to trap all shorts yesterday, so should squeeze and spike at the open. If at the $3 range at open, will buy because of the whole number and short squeeze. So I'm saying I can see this thing spiking at the open because of a bunch of people you can see that shorted. Anybody who shorted in this this morning they woke up, they held that position overnight. It's up here. They got to sell. And that's going to lead to spiking. So it's just a 15-minute. So here's what it looked like pre-market. Another relatively decent, clean pre-market chart. Clear support area right here at 305, which is why I put my order in at 305. And then there was there's this buy area down here to 270-ish area. So this is based off of today's pre-market chart. Plus there was support on the daily, hourly. See this area? We got some tails, really more support in the 6 from 40 to 60, but we see these tails here, these topping tails tell us, that there was still some price action there. So anyway, here's the back trading of it. Okay, so it did what I thought at the open. So let me just read what it says. Stock pulled back to 3 as anticipated. I entered the stock there. I had an order in at 305, and I got filled, got executed, and it challenged the 325. So like literally, here's the open, came down to my stock. Actually, second candle came here. It challenged up and then sold off. And as soon as I saw that it couldn't break, if you can't break this in the first couple of minutes where everybody's excited, I said I'm cutting bait because I don't see this working. So what did I say? Show weakness because of it. That I cut trade at 307. So I got in. It was a small winner. Small, basically this is called it break even. But the bottom line is I thought that it should go. And this is a stock who historically can't hold its gains when it gaps up. So why take the chance and wait and hope and see? And I just cut it. And that was a smart move because you can see it pulled down, came into this area that we talked about as the second buy area, and spiked a tad and sold back off. So it's weak. It's a weak stock, and that's why every time it gaps up, you never see it hold its gains. That's exactly why. So I'm glad that I got out of that one. Then the other one, I did trade this stock, and it was weak as well. But let me go ahead and go over the game plan. Stock is breaking out from the lows on what looks to be a first green day. If it spikes, it needed a gap. Okay, I mean it needed to go though. It didn't go to a strong support area on the time frame between 115 and $1. It currently sits at 132 pre-market. If it pulls back to the 115 and 120 area, I would buy. Okay, so here's some support all in here. So it looked, it's got a few things going in its favor if the volume and they really want to move it is right. But I don't think they wanted to move it because it didn't move. So here's it pre-market, another clean one. Okay, so here's what I said. Here's where I saw that 115 area. Anywhere between 115 and basically 110 was a good area to buy. Okay. What ended up happening is I was in the other trade, and so by the time it pulled into this area, I said, "Oh, okay. Well, I don't get a chance to trade that one." Plus, I had got out of the other trade because it was weak, CETX or whatever it was. So I said, "Well, the next area to buy is at the one area." And opposed to getting it where what I'm learning is when you're down here, when it's down there, just get your price. If it don't hit your price, fine. But when it's down there, just go ahead and let it hit your price. This line is at 98 cents. That thing came straight to 98 cents. I put my order in at 103, hoping to get filled, because sometimes you don't get filled. But when the volume ain't booming, you will get that fill. It will drop to that price area. So I was okay with the fact that it pulled back into this area, and I took it at 103. Now, what I say here? Let's see. I put in an order at 103 with the theory that it would bounce at the whole number, but it didn't. It actually did, but I was blinded by what I wanted as opposed to what it did. Took a small loss on the stock, but more important, failed to see what the chart failed to see the chart for what it was. And what I mean by that, I was blinded by what I wanted to do. I wanted it to hit 103, $1, and shoot back up to 113 because that's what I needed for a 10% gain. Okay, that's what I wanted. But what did the stock do? Well, it pulled into 98 where I had a support line. The high of this is 108. 10% win on that would have been the 108 because all you needed was 9 cents. So because I was blinded by what I wanted and not what the chart was actually doing, it showed me 10%. I'm sitting here waiting for it to bounce again, and then it breaks down. And so when it broke down, I just cut it. I think I cut it like 101 or something like that. But the point is, the lesson to myself is when you get down here, get the price that you want for one, and for two, look at it for what it did. Once it moves 10%, it moved 10%. Now you can hope for more, but what I'm looking for is 10%. So if I got in at 103, that's a poor execution on my part. Even though I only would have got 5 cents gain, I should have been cutting at 108. Why? Because that's where the 10% move was. I would have got 5% of the 10% move. So it's just one of those things. You live and you learn. But that's ended up what happening. And at the end of the day, I still ended up positive cash flow on the day, and I still took a winning trade and one losing trade, but the other one outweighed. But the bottom line is you got to be able to see these type of things. And this is where this is why I back test and back trade even stocks that I traded that day to make sure that I didn't miss something, to make sure that I wasn't blinded by ambition, so to speak. And so I do those things for that very reason. And this is what gets me better over and over again. This is why I've turned into a profitable trader instead of a break even or a losing trader, is the extra work like this. Okay, so anyhow, man, this is the recap. So this is what ended up happening for the day. I wish you all well. You got tomorrow. Hopefully we'll get a couple earning winners announcements with low float that feel like running like crazy. That'd be a great way to end the week. But we'll have to wait and see. All right, I'm out.